You've still got an outperform rating on the stock. You think the price could go higher from where we are, currently 10.8%. You see it hitting 300. Brad, just talk us through what you liked in the numbers.
Yeah, I think obviously the reacceleration to 20% on AWS in Q3 was like the headline critical metric they had to do. They did it. And so that really got the stock going. And then I think as you think about, going forward, they're getting this capacity deployed faster than we would have thought maybe a quarter ago. And they gave some nice detail around some of the power, the gigawatts that they've been able to deploy, and some forward commentary there. And it just comes down to kind of simple math. They're not saying they're going to accelerate necessarily on AWS, but if you do the math, it implies that they probably will. And that means there's probably a lot of upside to street numbers. And so that was the point we were making in our note.
I mean, 3.8 gigawatts is massive when you think about each gigawatt, potentially up to 1 million homes. That's how much they put on in the last 12 months. What are you making of the vertical integration here as well? The fact that they're saying that their Trainium chips are already a multi-billion-dollar company, how much does that build to future revenues?
Yeah, Trainium, to go with your second part first, Trainium 2 is largely being used for Anthropic, which is kind of the major enterprise player in the generative AI space. They're going to continue to grow a lot. They're going to double the number of chips at the Rainier site by the end of the year. So that is going to continue to scale up and drive a ton of revenue growth, and it is material to next year. And this is a $130 billion business, so it gives you a sense. In terms of just vertically integrating. It's massively important, right? The power grid is not set up for these data centers, and they have massive needs, massive cooling needs, massive water needs. And so it has and will always likely continue to make sense for these guys to make sure they can do that on their own, or at least become less tied to third parties. So I think it's the right thing to do.
Andy Jassy's time and time again been like supply is the issue here, not demand, Brad. What's interesting is that generative AI gets rippled through the entire business. We're looking at Rufus, of course, which is helping us decide what we're going to be buying on Amazon if we needed any more help on that. That's saying they could add another $10 billion. It's interesting to then dovetail that with what came at the beginning of the week. Look, corporate jobs are going at Amazon, and in many ways, Andy Jassy steered us to that 4 months ago. Is that inevitable when they're looking to bring generative AI as a way to catalyze the business?
Yeah, I mean, kind of two parts of that, right? Rufus is really intended to sort of, add we'll call it a tailwind to your shopping experience and your conversion. So literally get you to buy more stuff. So that's that part of it. The headcount thing is tricky because you're right. Like initially, you kind of follow the fact pattern, and then what we know of some other companies and the efficiencies they're getting. Clearly, generative AI is very likely that it is contributing to job losses right now, and some companies are overtly saying it. Last night, Andy Jassy, the CEO, said that largely it was kind of a function of overhiring middle management, trying to sort of flatten the organization a little bit more, so not related to generative AI. But I think by all intent and purposes, you have to think that trend is going to continue. And yeah, it's a little concerning from a deflationary standpoint, I would say, but that's what we know so far.